Banks seem to be holding on to our cash for dear life as the fear of bank runs is becoming a reality. So the idea is that our banks hold on to our money for safekeeping. Now that's been the norm for as long as we can remember. However, banks are not legally bound to hold on to all of our money inside their banks. In fact, most of our money doesn't even stay inside of these banks. They're quickly lent out to other people who will use them. This is why there are withdrawal limits whenever you visit your bank. And the same could be said if you're taking money from an ATM. This is to protect the bank from the bank runs and also to keep the bank solvent. However, the idea now is that they're not even going to give you your money. Instead, they want you to answer what the money is going to be used for. Now, again, this is your money. This is not a loan. This is money that you keep in these banks. It doesn't belong to them. It's your money. But the minute you want to spend $3,000 to buy a car, they tell you that you can't withdraw your own money. And this is something that's happening in different banks across the globe. The latest one that went viral happened in Canada, where a man was rejected when he wanted to collect his own cash. Now, before I share this video with you guys, all I ask is that you guys take 1 second, hit the like button for the video. We totally appreciate it. And I want to thank you as always for helping to spread the truth by sharing this video on Facebook and Twitter. Check this out.
It's my money. I'm allowed to withdraw from my own bank account.
Yeah, so
You said that what's the maximum limit you can give a withdrawal to a customer? It's $3,000 on the date. You've already mentioned that multiple times.
Yeah, not today.
Why not today?
Wow, folks, that's a video going viral TikTok. That's a bank in Canada, the bank in Canada refusing to give a customer money. I mean, it was his money. And, you know, we've talked a lot on this show and for a while now with respect to inflation in the market, but you know, what doesn't get enough attention is the social impact. You know, there's a direct correlation, for instance, with higher inflation and homicide rates. And of course, we continue to talk about this big spike in the so-called Big Mac indicator. By the way, that's also minimum wage. You know, there was a time when we used to worry about this stuff. This is the cover of Time magazine, March 13th, 1972. It says, "Is the U.S. going broke?" Now, the article begins with the statement, "Can a nation with a $1 trillion economy be running out of money? By most measures of private wealth, the U.S. is the richest country, but in terms of its ability to pay for the public services, health care, education, welfare, garbage pickup, pollution control, police, fire protection that make the life of its citizens pleasant or at least tolerable, or in some cases even possible, the country seems almost to be going broke."
Now, what do you guys think about that? Is the United States going broke, or are we already there? Because we know for a fact that the federal government has been spending money like crazy these past few years. It's one of the biggest factors as to why inflation is the way it is right now. And think about trusting a bank with your hard-earned money and then them telling you that you can't take it back. Like, how absolutely asinine is that? And it's also apparent that these banks don't want to give us the truth. The truth is they don't have the money. The teller cited that customers can withdraw $3,000, but when asked for the money, the policy simply changed. Now, there's a real fear that's going on within the banking sector right now, and it's becoming really, really serious. In fact, the idea is that bank runs may be inevitable in the future. And you could probably be thinking that this isn't plausible because our money's safe in the bank. But what if something unexpected happens? So the IMF, or the International Monetary Fund, is already warning of a possible cyber attack that's targeted toward the banks. They've even admitted that these kinds of attacks have cost the financial sector around $12 billion just in the past 2 decades. And it's not like we have not seen a cyber attack hit our nation. I mean, just think about the Francis Scott Key Bridge. The Biden administration doesn't want insurance companies to check what happened with the incident. They were actually able to determine that it wasn't a cyber attack just hours after the bridge collapsed. And even though the FBI opened a criminal probe with regards to the collapse, it's expected that we won't get the truth as to what actually really happened that day. But the expectation is that we should expect even more of these attacks, not just for our own critical infrastructure, but for the entire financial sector. In fact, the IMF, the International Monetary Fund, is saying that economic stability could be threatened if critical services are disrupted. This could erode the people's confidence in the financial system, which could then lead to people taking their money out of the bank in droves. However, if banks can't produce $3,000 on a single day's notice, how would they handle massive outflows of millions of dollars, maybe even billions of dollars? Now, some analysts believe that it would be next to impossible to get all of our money out of the banks, unless, of course, we comply with what they want. Now, one of the first ideas is to switch over completely onto digital banking. Now, we've We've already seen brick and mortar branches of banks close in recent years. You may have seen some banks close in your area, and the same could be said for ATMs. But even if ATMs are available, some of them malfunction to a point where our money sometimes goes missing. This happened recently to a woman when she used a Bank of America ATM where she tried to deposit $1,000. After the ATM takes the money in, the screen suddenly goes black. The ATM reset right in front of her. This means that her deposit of $1,000 in cash wasn't even registered. She entered the bank and had to talk to someone to try to get some help, but she was ultimately told that they would need to go through their cameras and check to see if she indeed put in that amount of money. Now, which again, it discourages us from using cold hard cash, slowly pushing us toward this idea that a digital dollar is the best course of action.
The long-awaited paper on the central bank digital currency being issued at this time by the Federal Reserve, in which they say that a CBDC could offer a range of benefits and risks. Don't come to any particular conclusion about it, but they say it could offer the general public a risk-free digital money that is free from credit risk, free from liquidity risk, would not replace existing digital money, but would be an addition to it. The Fed will not proceed, as Chair Powell has said, with a CBDC without support of Congress and the executive branch, ideally with an authorizing law. Let me go through quickly what the paper sees as the benefits. It would provide an electronic form of central bank money to the general public, households, and businesses, faster and cheaper payments, and expanding consumer access to the financial system. Many, of course, are underbanked in this country. The risk, well, it could affect the financial market structure, cost and availability of credit, because it could disintermediate the banks if they did it the wrong way, and also how monetary policy works. Now, three things the paper is calling for: privacy protected, intermediated, as in you don't do business right with the central bank, you may do it with digital wallets, and identity verified, so you can protect against criminal activity, among other things. Paper's meant to begin a debate, get public comment. They'll continue to explore a wide range of design options for CBDC. Kelly, this is moving very slowly, but it is potentially the biggest change to money since, I don't know, currency consolidation after the Civil War. So we're watching it very carefully.
Yeah, a huge step for mankind, Steve, but maybe a little bit shy of where they could have gone with this.
Yeah, they're not going anywhere without Congress and the executive branch. They're laying out the possibilities, the issues that have to be put together. But this is maybe at the end of the day, Kelly, as much a financial issue as it is a political issue.
Which doesn't really make sense, because I don't believe that it's possible to hack physical cash. If it's in my wallet or it's in my bag, maybe in my safe, under my mattress, I don't think anybody else can use it. But still, we're being told that a cashless society is the future. A future where they can literally track everything that we do. Every single purchase will be recorded, and who knows what will be done with these records. Some analysts believe that a digital wallet would only lead to more control, much like how many of us felt suffocated during the health crisis. This also reminds me of the Freedom Convoy in Canada, where the federal government literally froze bank accounts for all of the folks that were involved in the protest. And do you remember what these truckers were fighting for? The truckers were fighting for their basic rights. So I ask you, do you think that transitioning to a digital dollar would help us? Or would it expose our money to hackers, as well as create a precedent where we can be controlled? Now, as always, I'm gonna leave the last word with you guys. I want to say thanks so much for hanging out with me today. Thanks for hitting the like button. Thank you for spreading the truth by sharing these videos on Facebook and Twitter, and I'll see you on the next one.